Friends, India's digital payment system is rapidly evolving, and once again, the Reserve Bank of India has taken a decision that will directly impact the safety of every individual's money in the coming time. From April 1st, 2026, a major change is set to be implemented across the country in digital payment rules, under which two-factor authentication 2FA has been made mandatory for every online transaction. This essentially means that no digital payment will now be completed based on just a single layer of security. Instead, it will have to pass through at least two different levels of authentication. Until now, most digital transactions in the country relied heavily on OTPs or one-time passwords. But over the past few years, it has become increasingly clear that OTP-based systems are not fully secure. Cyber criminals have found ways to bypass this layer using SIM swap frauds, phishing calls, and malware attacks, gaining access to OTPs and emptying people's bank accounts. To address this vulnerability, RBI has introduced a new framework that moves away from sole dependency on OTPs and instead allows multiple authentication methods. Banks and payment companies will now be able to offer their customers a variety of options such as passwords, PINs, OTPs, biometrics like fingerprints and facial recognition, hardware tokens, and software-based security tokens. However, the key requirement is that at least two different types of factors must be used, and one of them must be dynamic, meaning thereby it should be generated uniquely for each transaction. One of the most significant aspects of this new rule is that it shifts a major part of responsibility for security onto banks and payment service providers. RBI has clearly stated that if a fraudulent transaction occurs due to non-compliance with authentication norms, the liability will lie entirely with the issuing institution and the customer must be compensated. So from the 1st of April, if bank is not providing you 2FA authentication and God forbid, if cyber crime happens, the bank will be responsible for that fraud and they have to compensate your frauded amount. Well, this is a major relief for users because until now, in many cases, customers were held responsible and had to go through lengthy process to recover their money. With this new rule, banks and fintech companies will be under greater pressure to strengthen their systems and ensure strict compliance at every stage of the transaction process. Another important change introduced by RBI is the concept of risk-based authentication. This means that not every transaction will be treated the same way. Instead, the system will evaluate the level of risk involved and apply security measures accordingly. For example, if a user makes a small payment from a familiar device and location, the transaction may go through with minimal friction. But if the same user attempts a high-value transfer from a new device or unusual location, the system may trigger additional verification steps. This approach not only enhances security but also improves users' experience by avoiding unnecessary checks for low-risk transactions. A key highlight of this new framework is RBI's shift towards a technology-neutral approach. Instead of prescribing a specific method like OTP, the regulator is now focused on achieving secure outcomes while allowing flexibility in how those outcomes are achieved. Technologies such as biometrics, device binding, and advanced authentication systems are now being recognized and encouraged. This opens the door for innovation, enabling banking and fintech firms to adopt more advanced and secure solutions without waiting for consent regulatory approvals, as long as they meet the required security standards. The impact of this regulatory change will not be limited to domestic transactions only. RBI has also announced that from October 1st, 2026, Strong authentication requirements will be extended to certain cross-border online transactions. For now, currently many international transactions bypass strict authentication, making them more vulnerable to fraud. With the implementation of these new rules, such transactions will become more secure and India's payment ecosystem will align more closely with global security standards by the end of this year. However, this transformation also comes with its own set of challenges, the biggest being the need to balance security with convenience. If security measures become too stringent, users may face delays and frustration during transaction, whereas weaker security can increase the risk of fraud. Therefore, banks and fintech companies will need to design systems that are both robust and user friendly. Experts believe that if implemented effectively, this new framework can significantly strengthen India's digital payment infrastructure and enhances user trust. Overall, RBI's decision marks a major shift in India's digital payment landscape. It is not just a regulatory update, but a broader change in approach where the focus is no longer just on enabling transactions but on ensuring they are conducted securely. In the coming years, the impact of this move is expected to become more visible as fraud cases decline and users gain greater confidence in digital payments. This steps also reflects India's transition into the next phase of its digital economy, where security, trust, and technological innovations are given equal importance. What do you think about this step of RBI? Please let us know through the comments. Thanks for watching.